Morning, everyone, and thank you very much for joining me. This is the morning market review. Today is Wednesday, it's the 11th of Jan, 2022. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address is rshaw@fxcm.com. Just going to bring up our disclaimers. I'll keep these on screen for a few moments. First, high risk investment warning. We're going to go for about 15 minutes or so, and then we'll switch to the crypto minute, just to give you an idea. All right, I'm working with two monitors. So if I'm not looking directly at the camera, I beg your pardon, I'm just looking between the two cameras. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments. Just want to double check, can you guys hear me? Can you see me? And can you see the screen? Just the three standard checks, just let me know. We'll look at market scope and trading view. Okay, excellent. Thanks very much, guys. Awesome. All right, we're going to start off again with the real rate. We look at this all the time. I think it's a good place for us to start in terms of our analysis. Basically, what we have in our top chart is the US 10-year minus the 10-year break even. It gives us what we call the real rate of return. And then this indicator at the bottom is a correlation coefficient. What's the correlation coefficient? Well, it's between the real rate and the US dollar. And you can see that for most of 2022, the correlation was extremely robust. It broke down towards the end of 2022, but it looks to be rebuilding as we start off 2023. What does that suggest? It suggests we've got to try and analyze, parse out the path of real rates. And if we can come up with some sort of sensible approach to the real rate, then perhaps we can get an idea of what the greenback's going to do. And if we can get an idea of what the greenback's going to do, well, then we can look at the majors, etc. So the real rate on a technical basis, and we're on a daily chart, it looks as if we've got a flag, okay, which we've spoken about previously. Here's the flag pole, okay, around about to there. Technicals say flags fly at half mast. Here's the target down. Fine, so we get the technicals. It's no use just having the technicals. We've got to know the fundamentals behind that. Okay? And then we try and sort of marry the two together. So what possibly will bring the real rate down? Okay, that's what we've got to try and understand. So on Thursday, which is tomorrow, we're going to get our CPR. So it's really all about inflation. If we get a further moderation in inflation, I think that we see the real rate also showing some signs of moderation. If we see some signs of moderation with the real rate, then we probably get signs of moderation in the greenback. If we get signs of moderation in the greenback, well, all of a sudden the majors open up for us. All right, let us take a look at inflation for a moment, and I'll show you what I feel are the important series for us to keep an eye on. So I'm going to just delete out the correlation coefficient. I'm going to delete out the US dollar. I'm going to just work on the one chart. So we're going to look at two series here. The first thing I want to type in here is United States core inflation. So we want to keep an eye on the core number here. We want to keep an eye on the year-on-year, okay, which is effectively a rate of change. Okay, and all right. So we're going to look at, we'll look at these series. So here is the core CPR. It's at 6%. I think that we can draw in a sort of a line here, and we can see if the next reading, which we get tomorrow, takes us below that line. That would give us a lower trough. It would give us a lower trough on the core CPR. Fine. If we get that lower trough on the core CPR, we want to watch that real rate. Does that real rate start coming down? The market seems to expect a Fed pivot. The Fed's talking that there's not going to be a pivot. They have to. They have to be hawkish because they don't want conditions to loosen now, because they've actually got inflation in the back foot. So they're going to be very hawkish in their comments so that conditions don't loosen up. Okay, let's just take a look at two more series here. Next one. Okay, we're going to look at core PCE. The PCE came out previously, and it is the pivot reading for the Fed. That's not what I want. Let me try that again. Yeah, that's better. That's better. So here we've got the rate of change, and here we've actually got something that's workable, and we want to see if the core CPR follows. Okay, let's just put in some peaks and troughs here. Okay, peak, trough. Okay, so see, we're now applying technicals to fundamentals, right? Lower peak, okay, and here we've got the lower trough. So core PCE, which is the preferred measure, is showing downtrend. We want to see that reflected in CPR, okay, which is coming up tomorrow. So the CPR at the moment is just lacking this lower trough. We want to keep an eye on that. Right. The final, and I think the most important of all of the inflation measures, is what we call median. Okay, so let's bring that up. Median inflation. It's this one over here. All right. Now this is an element of the sticky stuff. So what happens is you've obviously got a basket in the CPR. The basket, some of the elements would react to the interest rate increases. Some of them don't. This is a measure of that sticky stuff, that stuff right in the middle. It looks as if we're getting that apex here. Okay. This needs to roll over. Once we get this rolling over, and it does look as if it is starting to roll over, okay, then I think the idea is the Fed pivot becomes much more reasonable, much more probable. And if it becomes much more probable, take you back to the real rate. That real rate's got a flag. The flag's broken down, right? The correlation with the US dollar is starting to reconnect. Now we're in business. All right, let's take a look at some charts. Right, let's go through to the US dollar. And we'll start off with the weekly here. Okay, so we can get rid of all of this stuff. We don't need this stuff anymore. Okay, what we need is to acknowledge the trend to the downside, right? Peak. Okay, there's the trough. There's the lower peak. Okay, once you've got the lower peak, there's the weakness coming in. Here's the lower trough. Okay, so dollar in downtrend on a weekly basis. Take a look at the RSI. The RSI is below 50. The longer it stays below 50, the more probable for a price decline. Just let me show you what I'm talking about here. Over here, we've got an extended period of it staying above 50. Well, that's positive momentum, right? Well, that's gone. That's gone out the window. We now got it under 50. The longer we stay under 50, the more pressure that's going to build. We must note just the extremes. Okay, the extremes. So the RSI does a pretty good job of overbought, oversold. Okay, so we're not oversold at the moment, but you can see that every time we hit this overbought, there was a pullback, yeah, pullback. Okay, so we use the RSI for overbought, oversold, which is different to the stochastic. The stochastic is pure momentum. Let's go down to the day chart now. Now this is where it gets really interesting because we have slipped back into zone 3. What's zone 3? Zone 3 is your bear area. That's between your lower blue, lower red. Okay, so now we've got downtrend on the weekly. We've got a synchronization with the daily. Okay, we've got a really good looking RSI in terms of it being under 50. Let's go down to the hourly chart now. And here is where we can start looking to see if there is an aspect of timing. We can get, so here is the 1, 2, 2, 3. Let's put it, so I'm being a little bit loose with the 2, 3. What am I doing here? Okay, is I'm looking for zigzags. Effectively the pulse, the heartbeat. Okay, because we don't move in a straight line. We move in 1, 2s, 2, 3s. Okay, we're trying to see if we can get it. Now it looks like we've got the 1, 2, 2, 3. Now what we need is we need more angle and separation. So we have got the bearish cross on the exponential moving averages. We need more angle and separation to the downside, right? And then we need the stochastic. So the stochastics cross negatively. In order for the momentum to really catch, and we want to get it, see if we can get a swing here. Okay, it needs to drop towards 20 and hold. If we get towards 20 and hold, well, then we probably get a swing. So now we want to see if the zigzag is a bona fide, it's a real lower peak. And one of the other ways that we can do that is monitor the central pivot. So the central pivot here is resistance. Okay. So we're right on this resistance area. We want to see if it's going to react, and if it's going to react, we need the EMAs to show that angle and separation to the downside, and we need that stochastic to drop all the way to 20. Just to give you an idea of how this works, I'm going to show you what happened with the DAX yesterday. Okay, so for the DAX yesterday, we put in the peaks and troughs. Okay, exactly what we've just done on the dollar. We did an analysis of the zones. You can see that it was in zone 1, okay, upper red, upper blue. That's really good looking. And then what we did is we looked for the crossovers yesterday. So this was a good trade yesterday. Okay, we had a bullish cross to the upside on the EMAs. We had a bullish cross to the upside on the stochastic, and we pushed all the way up to the 80 level and held. What did we get? A swing. Okay, so now you can see what's happening with DAX now. So DAX is now pulling back. 1, 2, 2, 3. Now we want to watch the central pivot for support, and we want to see if that central pivot holds. Do we get the next impulse up? I'm going to put a question mark there because we don't know in advance. But what we'll do is we'll watch the trend following indicators, your EMAs. So we want to see if the EMAs push to the upside, get that angle and separation to the upside. And we want to watch the stochastic. If the stochastic holds this 80 area, then we could get perhaps the next impulse move here on DAX as well. Let's take a look at one more, and then we'll go across to the cryptos. So we'll go through to Euro US dollar. Okay. Top-down analysis. You can see we've got this really good looking higher trough, higher peak, higher trough, higher peak. We've got this higher trough question mark. I think this question mark we will be able to take out pretty soon. Where are we? We're in zone 1, upper red, upper blue. Okay, go down to the hourly. So yesterday the euro, there was no angle, no separation, so we just had the sideways movement. Moreover, whilst we did get an initial cross on the stochastic, it never made its way up to 80. So you can see the stark difference between the DAX and the pattern on the euro. But now we've got a crossover again. Do we get that angle and separation? Okay. Do we get the stochastic making its way through to the 80 area? So all of a sudden, euro comes back onto the watch list. It really depends, going back to the US dollar. Okay, does the US dollar react off of resistance? If the US dollar reacts off of resistance, if the US dollar reacts off of resistance, then the euro US dollar probably reacts off of its support, okay, which is over here. Guess where? At its central pivot. Okay, so sort of mirror images of one another. All right. I'm going to stop over here. If there's any questions, go ahead and type those in. But we certainly have got some candidates for the watch list today, and we'll keep an eye on those. Any questions, type those in. Otherwise, we're going to go through to the crypto. Would it be prudent to wait for tomorrow's CPI to get direction? I think there will be market movement today. I think there'll be positioning today, Indran. Again, it all depends on if there's a build-up of that momentum. There's no doubt that there's pre-positioning before tomorrow's announcement. Okay, that pre-positioning probably drives some sort of price movement. Most of the price movement would take place after the fact. It take place once we, assuming that there's either a surprise to the downside or a surprise to the upside. So it's going to be a repricing based on the surprise. Does that answer the question? Okay, cool. Alrighty, let's wrap up here. I'll go through to the crypto minute. I'll see you guys there. Thanks very much.